we go. Alright. Good afternoon, everyone. Today is Wednesday, the 31st day, the final day of July 2024. And we ended with a great day in the morning session. We ended with our highest month of the year as far as earnings go in the morning session. So it was a great start to the day today. And I think it's going to be a great rest of the day today, too. First of all, if you have not taken a free trial with us, do I even have one going here? I do, right here. If you have not taken a free trial with us, go here to targetviewtrades.com and sign up for the free trial. The trial is right down here. It's 25 bucks a week after the 3-day trial. Alright, you get a free 3-day trial. Now to take the trial, you have to give me your TradingView login ID. That means you have to have TradingView charts. If you don't have TradingView charts, click on that. If you're a futures trader, you have to have futures data. If you don't know how to do that, watch the setup video. The setup video says how to get futures data in the first minute. Maybe 2 minutes. But it's 25 bucks a week after the 3-day trial, or 90 bucks a month after the 3-day trial. 90 bucks a month is 10% cheaper. If you take the 3-day trial and it looks like it's something that you want to do, that you want to take the whole month on, and you've only signed up for the $25 a week one, tell me, we can just swap it over. That's fine. While you're in the trial before the payment actually goes through. Or if you want to upgrade from the weekly to the monthly, you can do that too, because the monthly is 10% cheaper. If you want to go for the big one, go for the annual, that's 23% cheaper, I think. But anyway, that's how you take the trial. Alright, again, you're going to need TradingView charts. Everything runs on TradingView charts. To get TradingView charts, click on this from Target View Trades, click on that. That brings you right to the website. Alright, I don't think I have a video in there. Yeah, this is going to bring you right to the website. But click on setup right here, and that tells you how to do all that. It tells you how to get the charts, tells you how to get the data for the charts. If you're trading futures, you need to have data for the charts. Do not try to do it with delayed data. That's not going to work. Alright, I had to get through all that stuff. I got to get through all that stuff every time. But I did it quick this time. So let's get into what I wanted to show you. Now, what did I name this? Let me look over here. I forgot what I named this in the email. Hang on, where is my cursor? Did I unplug that? Oh, there it is. Okay. Hang on. Yeah, transform, stop loss, and liquidity. Okay, that is what I called it. Alright, now the reason I called it that is because lately, particularly with the NQ, the way the markets have been bouncing around a lot, we have had very limited liquidity. Oops, that's not what I wanted to show you. This is what I want to show you. We've had very limited liquidity with the NQ. Let me just close that other one so we don't mess that up again. We had very limited liquidity with the NQ. And by liquidity, what I mean is if you look at your DOM or my DOM or this DOM right here, the sums down here at the bottom, they're in single digits sometimes. And I've gotten to the point where I'm going to be trading 20 contracts starting tomorrow. And you see that? See the spread in there? The spread? And in the single digits, you can't trade 20 contracts when it's like that, right? You need to have liquidity. The NQ doesn't have liquidity anymore, at least not this NQ. However, this little guy right here, I mean, it doesn't have much right now because of the news that's come out, but this little guy right here has almost 5 to 10 times as much liquidity as that one does, and it should, because it's it's a tenth the cost of that. But that all comes into play with what I'm going to show you in here. All right, when it's jumping around like this, the smaller time frames, they're just not going to work. Okay, they're just not going to work. Well, let me just show you some stuff, Mark. All right, trading the ETFs is great. You can do both. You don't have to just do one. But what I wanted to show you is this. You see, this is on a 50 range bar right here. Normally I trade on a 15 range. When I'm trading the NQ in the morning, I trade on a 15 range. Now, what I was just suggesting to you is that there's more liquidity in the micro. So you can go to the micro and you can trade the MNQ. All right, it's gonna be roughly the same. Did I do that wrong? I did. MNQ. It's gonna be roughly the same as far as price movement. See, we got the same bullish arrows in the same places roughly, and price by itself is roughly the same. If I bring over the NQ DOM next to the MNQ, See, price is bouncing around right in here in the same place, roughly the same amount. This is bouncing around faster with more of a spread because there's more liquidity in the micro. But the thing that I'm saying is if you go to a larger time frame, a lot of guys don't go to a larger time frame because they don't want the risk that's involved. The bigger the time frame, the more risk you have, right? You guys all get that, right? Bigger the time frame, the more risk you have. I accidentally just minimized something that I need to see. There it is. Okay, yeah, here it is. The bigger the time frame, the more risk you have. So, to get really good trade setups with a larger time frame and still have the amount of risk that you want, if you go to the micros, like let's say this is a 50 range. Now normally in the morning session on the NQ I trade a 15 range. So let's just say we'll go to a 45 range. It'll be 3 times, right? 3x. So we'll go to I gotta create a 45 range, I guess. Add a custom interval. We'll do 45 and range. Add. Okay, so now we'll just got it on the 45 range. It's right here. We'll bump the chart to a 45 range. Okay, so you still get great signals. All that stuff is still there. It works on any time frame. All right. Now what this is 3 times my morning session that I normally trade in. So in the morning session, it's $5 a tick, and my stop is $20, and my stop is 20 ticks in the morning session. So with a 45 range, the triggers should be on the pivots most of the time, so you don't have to have like an 80 tick stop. You get away with like probably a 55 tick stop. Now the money's not going to be the same, obviously, because it's a 10th. But to make up for the larger stop, like right here, we just gave this, and the stop is 19 points. Now my normal stop in the morning session is 5 points, so that's 4 times my normal stop. But it's 1/10 the price, right? So the actual dollar value of that 19 points is $38. So you can make it. I went to 3 times the time frame. You can trade 3 of these contracts. You can trade 6 of these contracts, whatever, to make it fit what you want to use for a stop. The micros I'm talking about. If you go to the micros, you can trade. The micros are 50 cents a tick. So if you trade 5 of them, then it's half of what the morning session would be. It'd be $2.50 a tick. So with a 19-point stop, instead of having, that'd be a $190 stop. A 19-point stop with 5 contracts on would be a $190 stop. I believe that's right. Let me just make sure I'm doing the math right. It'd be 19 times 0.5 times 5. A 47.5 stop? Is that right? Oh, 19, hang on, 19 points. That'd be 19, it was 19 points, right? Yeah, 19 points, that's right. 19 times 4 times 0.5 times 5, that's what it is. 190, $190 stop, that's what I was saying. Now if that's too much for you, you can go to a smaller time frame, you can bump this down a little bit, or you could trade fewer contracts, go to 3 contracts. But either way, you can make it fit using the micros. You can make it fit using the larger time frame, so you don't get lost in all the chop that happens in the morning session, and particularly on the NQ. Those of you guys that like to trade the NQ, particularly on the NQ, you can get lost in the chop really quick on a 15 range right now, lately, it seems like. And that's why I was saying with the liquidity, there's more liquidity in the micros than there is in the regular contract. Granted, you're going to have to trade more contracts to get the same dollar value per tick, but you don't really want that same dollar value per tick because you're trading a larger time frame. So you can have bigger stops with the same amount of dollar risk. The same dollar risk. You can have bigger stops. So you can trade the larger time frame using the same dollar amount of stop. And then your returns are going to be much bigger. You're not going to be looking for 10 ticks. If you're trading a 45 range, I'd be looking for 60 tick profits. 60, maybe 70 tick profits if I was trading a 45 range. I wanted to point that out to you because a lot of people don't really think about it in those terms. They look at the micro and they say, oh well, it was for a little while, the micro, when it first came out, they were ripping people off with the commissions. If you're paying more than 50 cents aside on a commission for the micro, then you're paying too much. Okay, but that is where the difference would come in, and nobody's actually mentioned that yet. But the difference would come in the commissions, because my normal commission is really good, but I mean the normal commission for people who trade is for people who trade regularly, don't trade in quantity like I do. Their normal commission would say $5. Okay, and so with a 50-cent commission for the 50% commission for the micros, you can trade 10 contracts to get the same thing commission wise. So anything less than that, and you're probably getting a deal on it. You see what I mean? So the whole commission thing it gets washed out as long as you're not paying an exorbitant amount of commissions for the micros. I know that would be an issue, but again, when you go to a larger time frame, you're not going to be trading as much either. All right. Now it's 3:11. Last time I took a half an hour to say a bunch of things. Well, half an hour to really cover one subject, and I didn't end up getting everything covered that I wanted to. This time I feel like I'm going to cover everything that I want to. So what I was going through right there. Hey Jenny, what range would I use for the YM and the MYM? That is an interesting question, because the YM doesn't work in like 4 ticks per point increment. The YM is every tick is a point. And it's funny you ask that, because I took a YM trade a little while ago. Let's go to the YM. MYM. I took a YM trade a little while ago after the FOMC came out and after they started talking a little while ago. And I actually made a little screenshot of it for you. 41,275 was my buy on the YM a little while ago. I bought a bunch of the micros at 41,275. Is that right? I think it's where I bought it. All right, yeah, 41,275. And is that right? Let me just look at that again. That doesn't look right. Yeah, 41,275. That's where my buy was. Okay, but I bought a bunch of them at 41,275, and that was a little while. Yeah, it was right here. It's right around here. That's right. It's right around here. Now I didn't buy it off of this, mind you. I bought it from, was it the 50 range I was looking at that point? It might have been the 50 range, or it was the 20 range. But I bought it, Jenny, because I had an indication from the next thing that I'm going to show you. Alright, now if you're a subscriber or you're on the trial, you have to be a subscriber or on the trial to be able to get to the next thing that I've created. Now I haven't finished with it because it doesn't have alerts yet, but it's in the beta version. Well, it's not in beta version yet. When I publish the beta version, after I'm done with this meeting, I'll publish the beta version. It'll be in the beta version. So anybody that's already got the beta version, you have to take that off your chart and put a new one on to get the latest. Not right now. You got to wait until I actually publish it. If you don't have the beta version and you want it, and you're either on the trial already or you're subscribing already, send an email to support@targetviewtrades.com. Put snipe and put your login ID in it in the header. Just put snipe and your login ID in the header. Okay, I'm logged in as TV Trades. That's what I need to get from you guys. All right. So I'll show you the conservative part first. Now you know how this all works, right? Is anybody in here for the very first time? Let me go look at who's in here. There's a good group of people in here. Is anybody here for the very first time? If you are, then just type something into the question box. Okay, if you're in here for the first time, then I'll go through some other things. Casey, how can you trade the Apex funding account on TradingView charts? You can trade your Apex funding account. That's a NinjaTrader thing, right? So you're going to trade your NinjaTrader platform using TradingView charts. That's what you would have to do, Casey. Okay. I mean, the trades that I take, this is StoneX. The trades that I take are not on TradingView. All right, I trade on StoneX. So, no, I do the same thing that you're going to have to do. You don't have Ninja. What do you have, Casey? What do you trade on right now? I know Apex has a deal with Ninja. That's why I was saying they have Ninja. Okay, you have TradingView, but where is your brokerage? TradingView is not a broker. amp. Okay, so you traded amp. That's fine. You just use the amp DOM and use TradingView charts. TradingView charts are dirt cheap. To get the charts, again, I'll go right here. To get the charts, go to targetviewtrades.com. Just click on getting charts or watch the setup video. Go to setup and watch this video right here. It tells you how to get the charts and how to get the data. You have to have the data. Alright. You can probably use the AMP data if you want, but don't try to trade. I'm going to show you what I think you're probably asking me is if you go down here to the trading panel. If you go down here to the trading panel, you're probably asking how you can connect the AMP to the trading view and do it that way. That's probably your real question, and I wouldn't do it that way. If you do that and then you try to use the trading view DOM, I wouldn't do it that way, because that adds another layer of communication between the trading view DOM and your AMP, and then your exchange. So what I would do is go to AMP and use whatever DOM they have, or however you trade at AMP. If you trade on the charts, whatever it is, put your trades on over there at AMP, on whatever their platform is, because that's going to go directly from them to the exchange. Alright. Use the charts on TradingView to pick your trades. That's what I do. That's what I've been doing for years. Use the charts on TradingView to pick your trades and place them wherever your account is. I know AMP is down here, and if you have your account at AMP, you may feel inclined to click on that and connect your data from AMP to TradingView and do all that kind of stuff. And that may be a good thing for you. It may not. I know the futures data for TradingView, to get their futures data, their real-time futures data, is $7 a month. Alright, if you watch the setup video, go to here, targetviewtrades.com, and watch the setup video. In the first minute or two, I show you how to get the futures data. Okay, so that is what I would do there. If you don't have Ninja, that's good. That's good. I know that Ninja and Apex has a thing with Ninja. That's why I figured you had it. If you do have Ninja, they have a thing down here with Tradeovate. Tradeovate is in the list down here. Right there. Tradeovate is in the list. So, again, I would trade straight on Tradeovate. I would trade on their DOM. They have a nice DOM. Their DOM is a lot like the DOM that I use. This one right here, the Tradeovate DOM is. I would trade straight off the Tradeovate DOM. So if you have Ninja, they bought Tradeovate, and the Tradeovate DOM is way better than the Ninja DOM. The Ninja Super DOM. The Tradeovate DOM is better than that one. It doesn't have as many bells and whistles, but it's just easier to use. Alright, so the fun part. Dun, dun, dun. Well, the sniper thing. Now, I created 2 levels of it. Nobody said that they were in here for the first time, right? If I'm actually limited to web-based only, okay. I don't know if AMP has anything web-based, but if they don't, then you might have to do the thing in here where you connect to them. And I would ask AMP how to connect to the TradingView charts. Right? I don't know. I don't have an AMP account. I used to have some contacts over there at AMP, but that was like 10 years ago. They may still be there. Actually, 2 of them still are, but I haven't talked to them in a while. Okay. Alright. What I was going to show you. Nobody said they were in here for the first time. Let me just look at the list again and see who's here. See, I think there are some people who are here for the first time. So let me just show some things that are pretty basic. That, they're all in a bunch of the videos and all that. You are first time. Okay, how does it work with the S&P 500? I will show you all that in just a minute. Okay. Well, I'll just go to the ES. We'll just go to the ES. Let's go to the ES. We'll just put it on the ES. And it doesn't matter where you put it on. Now, this is just a default look, right? If I shut this off, this is what the chart looks like. And then when you come in and you put, if you have just regular TV trades, you just put it on. Click it one time, it's going to go on the charts, and this is what it looks like with the regular TV trades. This information in the table is based upon the last either blue or red arrow. Alright? If we go back to a red arrow, which we don't seem to have too many of here, but it doesn't, by default, it doesn't have shorts on. Alright, by default, it doesn't have the shorts on. So let me put the shorts on. It'll probably have a red arrow right here if I put the shorts on. Let's see. By default, it only has longs. I'll put the shorts on. There it is right there. Okay, so by default, this table is showing the information based on the last blue or red arrow, whichever one it is. So the last red arrow is right here, all right? So when you get a red arrow, this would give you, this one actually didn't give you a notice, but this over here would have given you a notice 2 bars ahead of time that you're having a blue arrow was likely to come up. The notices can come in many forms. You can have them come in alerts. Well, it's always going to send you a log for any alert that you create, but you can have it sent in here if you create a notice in here. You can have it send you an advanced notice. You do 1 bar per close. You put in the symbol that you want in here. Do 1 bar per close, and you can have it sent to the app on your phone. That's what I do. I have it sent to the app on my phone. You can have it play a sound on your headset or your speakers if you want. You can have it sent to another app if you want. Send you an email or send you a pop-up over here on the screen. You can do all those things, just one of those things. None of those things, if you have nothing checked in there, it's going to show up over here on the side. Okay, this is the log of alerts. Alright, this is all the alerts that I've had today. Well, and then some, it's 99 plus. So it's a whole bunch of alerts. These are the alerts that I have set. So I have alerts set for all these different things. And that is how you set it up. So with the S&P 500, this is the S&P on a 20 range. Now I would not necessarily use it on a 20 range, but you can see right here, well right here, we'll use this for an example. It gives you the entry right here, the entry point up here, short entry 72.5, your stop would be at 82.5. The stop is based on the prior bar, so your stop's going to be up here at the high of the prior bar in this case. So it's 10 points is what the stop would be in this case with a 20 tick range, with the 20 range bar. And if that's too big, you can go to a smaller time frame, right? If that stop is too big, you can go to a smaller time frame. There's no problem with liquidity on the ES. You don't have the same problem with liquidity on the ES that you do with the NQ. Now, everybody that's coming in right now, you're going to want to stick around for the next part that I'm getting to. Okay, I know I'm answering questions, and I got to cover all this stuff for everybody that's just starting out. Now, again, there's a whole bunch of people that showed up late, so I'm going to go back over how to take the free trial. If you haven't taken the free trial, I'll go over that too in a minute. But see, it gives you the entry, it gives you the stop. It tells you where the first target should be, 55.47. So the first target is all the way down here, 55.47, and the next target after that is 39.5. And it's like right here. It's not much further low, not much lower than that. The next target after that is 28.5. You can have it go out to more targets. If you go in here and you click on this, I have it set to 3 by default, but you can set it out to 5 if you want to. And you can have it draw the target lines on the chart for you. You click that, it'll draw the lines on the chart. First target, second target, third target. Draw it all on the chart for you. And you can have it show the risk reward on every trade. The risk reward right there, 2.55. So that's 2.55 to 1 is the risk reward on this trade. Alright. So it gives you all that information. As soon as you turn it on, it gives you all that information. And every trade, you get all that information. Every trade that you get a blue or a red arrow on. Now, there are mid-trend trades that happen in the middle of the trend, like this one, and it didn't quite put one in there. But if I go here like this, you'll see like these mid-trend trades. If you have a big trend and you end up missing the first trade in the trend, like you missed this one. Well, I'm surprised this one doesn't have more, but I think it's because, do I have the bias on? I don't have the bias on. If you miss the first one, you want to be able to get into the trend, like in a big trend like this where it's going down. This one right back to the stop, and then it moved down. You want to be able to get in on the mid-trend trade. Now, the mid-trend trades do not change the values in the table, in the target table. Alright, the mid-trend trades do not change the values in the target table. The target information is valid for all the mid-trend trades as well. So this first trade right here that it triggered just a minute ago is now looking like it's going to get down to the first target. Now in here, I would trail my stop and I'd be locking in some profit. Okay, I'd be locking in some profit. And this is what it looks like on the ES. And this is on this time frame. What time frame do you like to trade on? Well, okay, I want to answer everybody's questions, but I also want to show you guys the cool stuff too. Okay, so this is just the basic stuff. It'll do the risk reward, the targets. I like range bars. Now let me explain why I like range bars. Okay, 2 minutes. Let me explain why I like range bars over minute bars or over any other bar that counts down to 0. Let's just flip this to a 2 minute bar. Okay. wait till it loads up. Okay, so here we are on the 2-minute bar. Now it gave you the same trade, and it gave you this one that would have, well, the stop would have been, the entry would have been here, the stop would have been here, so it would have stopped you out on that one. Then it gave you this one where the stop would have been right up here, so that second one would have worked out. But let me explain what you know about this candle right here with the 2-minute chart. All right. First of all, you know that it's going to take another minute and a half for it to go to the next one. You have no idea where it's going to be when it gets to the next one. All you know is that it's going to take a minute and a half. It could be all the way up here. It could be all the way down here. You have no idea where that's going to be, right? You just know it's going to take a minute and a half. So you know that it opened right here. So far the high is right there, and so far the low is right there. No clue where it's going to be when it gets to the next bar. So you can't be proactive. You can't do anything. You can't be proactive. You don't know what's going to happen next. You have no idea what the price action is going to look like. From a technical perspective, the high of the bar, the low of the bar, any of that information, you don't have any clue until this bar closes. And you still got another minute to wait, just about. Right? So, I'm saying this. I'm saying this because you have very limited information. Right? And if you have like a transaction bar, like a tick bar, like a 233 tick or something like that, or a volume bar, that's even worse. You have even less information. At least with this, you have a countdown to 0. With that, you have a countdown to 0, but you don't know how fast it's going to go to 0. You know, it can go to 0 in 2 trades. It can go to 0 in 50 trades. You know, you don't know when it's going to go to 0. You don't know how fast it's going to get to 0. At least this one, you know how fast it's going to be getting to 0. So you know 2 things about this. You know where it opened. You know how long it's going to take to get to 0. All right. If you have a volume chart, they don't really have volume charts here, but I can show you a volume chart on a different platform. Here. If I put this, I told everybody this morning that we we're going to get up there and fill that gap. That is the gap right there. That was the gap from last week. I told everybody this morning we're going to fill that. They would do it on the NQ too. I was saying we're going to do it on the NQ. We didn't quite get there on the NQ. But in here, for instance, if we right click and go to, I'll go over here. Sorry. This is a 30-minute chart, but I can go create a volume chart. Like here, we'll say this is the ES. So we'll say 500 contract. So right now, when it loads up, this bar right here, I know up here is the counter. Way up here on the top is the counter, right? I know it's going to count down to 0, but I have no idea how long it's going to take to 0. How long it's going to take it to get to 0. You see how fast it's going to get to 0? It's never the same. It's never the same. So that's even worse. You know, with the 2-minute bar, at least you know it's going to take. But Renko, you go back and look at some of the webinars that I did about Renko. I did Renko and Heiken-Ashi webinars about a month ago. The best bar is the range bar, and let me explain to you why. Okay, let me just go to a range bar. So we're on the ES. Let's just go back to the 20 range that I had to begin with. All right, it's easier to deal with the ES on the 20 range because it is a multiple of 4. Here we are. All right. So this bar right here, to get to the next bar with a range bar, it has to exceed the range. Right? It has to exceed the range of the bar to get to the next bar. So the only way it's going to get to the next bar in this is if it closes, if it runs over 20 ticks above the bottom of the bar or runs over 20 ticks below the bottom, below the top of the bar. So I know ahead of time, if this bar is going to close down, this bar is going to close down 5 points below this at 47. If this bar is going to close down, it's going to close down exactly 47.50. If it's going to close down, I know that ahead of time. See, it just closed right there at 47.50. I knew that ahead of time. And if this bar is going to close down right now, if it doesn't go up anymore, it's going to close down at 43. I know that ahead of time. Oops, now it went up. So now I know if it closes down, it's going to close down at 45.25. Now 45.75. I know that ahead of time, so I can be proactive with my order. All right. So I can put my order on ahead of time, saying if this gives me a down close and I know it's going to be a trade setup on a down close, I can put my order there and have it waiting ahead of time, so I don't miss out on anything. I'm ready ahead of the time. I'm ready ahead of time for the trades. All right, and that's how I do it in the morning all the time. Now I've been trading. If you don't know me, you know most of the people in here have known me over the years. But if you don't know me, I've been trading for over 40 years, and I've been doing this stuff, trading futures particularly, with thousands of people over the last dozen years. I've been training people every day. But that's all the basic stuff. How to trade, how to use a range bar. The range bars are definitely the best. Right? Every range bar has to close at the top or it has to close at the bottom to get to the next bar. You don't know how long a bar is going to take. You never know how long a bar is going to take. There's no time element. But you do know what the price is going to be when it ends. You know that ahead of time. So you can take action on that. Alright? You don't know how long it's going to take, but you know where it's going to be. So you can take action on that. You can take action on that ahead of time. You can be proactive with that. That is why I use range bars. Right? So, going back to the other stuff. The mid-trend trades, these little black arrows, they give you a warning ahead of time telling you have a trade coming up. Alright? If the blue arrow on the red color happens, then you get a warning there telling you have a trade coming up. If you have a red arrow on a blue background, you get a warning here telling you have a trade coming up. Again, the black arrows tell you have a trade coming up. Those all give you a notice that you have a trade. Right? And those notices come in the form of alerts, however you want to program the alert. Alright? These alerts up here. They come in the form of these alerts that you can create. And there's videos on that too on the website. Alerts right here. You can watch this video right here. It tells you how to create alerts for all the different things. Okay, I probably need to update that because it used to do an SMS. I think it looks at the SMS. But alright. If you're just getting in right now, I haven't even shown you the cool stuff yet. If you haven't taken a free trial, let me just show you this. If you haven't taken the free trial, go to the home page here at targetviewtrades.com. Sign up for the free trial right here. The trial is really free. You do need to have TradingView charts. All right, you have to give me this thing right here. Whatever you log in as, I'm logged in as TV Trades. Whatever you log in as, you need to give me that. It's part of the process of signing up for the free trial. But yeah, just do that. You know, it's only $25 a week to get started. If you like it, you can upgrade to the $99 a month. It's actually a discount, the $9 a month. You can do all that. Okay. Now, I really want to get into the cool stuff because I always run out of time. Alright, so this is what it looks like when you just turn it on by default. Now, I'm going to get rid of all this stuff. I'm going to shut everything off. Okay. Everything off. So you don't have any arrows. All you have is the background color. And mark, yes, the background color is important. The background color does mean something. Do I usually use the 20 range? No. In the morning session on the ES in the morning session, I use a 7 range, but that's all gonna change over time here. You're gonna see, Casey. Well, you don't get into the morning session, but I don't always use a 20 range. If I were going to trade it with a micro, I would use a larger time frame, like a 20 range, if I'm going to trade it with a micro. But to minimize the amount of risk that I trade with in the morning, I use a 7 range. Okay. Now, let me slow down for a second and take a drink. All right. So here we go. The new thing that I created, the snipe. Now, I didn't want to have anything else on the chart except the background color. You can look at the background color. Now, there's still a little, there might be one bug that I left in the snipe. I think I left it in the snipe, but I'm not sure. But the background color is meaningful, Mark. You had sent that in an email asking about the background color. The background color is meaningful. You're not going to get any long trades with a red background. You're not going to get any short trades with a blue background. Okay, so it kind of gives you an overall direction. You know you're not going to get any of those opposite trades in here right now. But when I add the snipe on here, it's going to give you a little bit different look. And this is, well, let me just add it on here. Okay. Now you see, I have this right here is just the regular TV trades. This is how the regular TV trades looks. Right. Now, I have the beta, and I've been putting changes in the beta over the last month. You guys, those of you guys that have been subscribed and have been coming to these things on a weekly basis with me, you have seen the things that I've changed over the last month, and there have been some significant changes. We had the hot tips, we had the pivot levels, the pivot look back. We had what else did we change? I don't know. There's a few changes that we added in there. But if I just shut this off, oops, I didn't do that. If I just shut this off, and I put the TV Trades beta on instead, this is the default look for the TV Trades beta. Now, if I go here and I throw the shorts on, you're going to have the same thing that we had with the other one, right? You have the same short there. Now, this is a blue arrow right here, so this is built off the blue arrow, but it did give the same information here a minute ago with that short. So this is built off the blue arrow right now. And the blue arrow is saying you have a stop here of 8.5 points, and the first target's up here at 5588.5. I don't know what the risk reward is. I can turn that on and see. The risk reward's 2.94, so that's a great risk reward. That's that. Now, there's a thing in here called enable the bias level. Right here, enable the bias level, and that is, it was created for futures traders because a lot of times with futures, you'll have things that'll flip back and forth really quick. And if you have a bias level, it's only going to give you longs above that bias level or shorts below that bias level. And that bias level is a simple moving average, right? It's a 233 simple moving average. Now, the whole idea of TV trades is that you have concrete decisions that are made for you, right? All these concrete decisions are made for you. They give you the arrow, that's all. They give you a notice that an arrow is coming, and then they give you the arrow. That's all. Okay? That's the whole idea. If you're in a long trade and the background changes, should you exit? You should probably be looking for an exit or start locking in profit. Mark. That's what I would do. Alright? Because if the background changes, that means there's a fundamental change that's happening. That's likely to happen. When the background changes, there's a chance that it's just a complete change of direction and it's going to start going down. You're going to start getting short trades. Okay? So, what was I saying? I lost my train of thought. Anyway, the new stuff. I did two things with it. I did a conservative one. Alright, I was talking about the bias level. I did a conservative one. And I did a, I'm not sure that's the right bias level. Hold on. Let me properties on that. Bias level, targets. Yeah, I need to do something else here. That's not the right one. Let me minimize that and go down here really quick. And go to Pine Editor and do open my script. And this guy right here. Okay. And now I hit add to chart. And this is the TV Trades beta that I wanted to show you. So it's got all the same stuff that the other one did, except it's got more. If I click on this, you see now we have two bias levels. We have a snipe bias level. Now the snipe bias level is always on. This one, the enable bias level is for this. The snipe bias level is always on. If you're going to use the snipe trades, I recommend shutting off every other trade. Okay. And what is the snipe, you might ask? Well, it's a super accurate trade. It can be long-term. It can be long-term. It can be short-term. Alright, now, I have the sniper, and then I have the aggressive sniper. The aggressive sniper is going to be a lot of trades. A lot of trades. But you can use it on a large time frame. This one, the regular sniper, is not a lot of trades. It's conservative. Alright, if I click on that, it's going to show you longs and shorts. Okay, long trades. Long trades. Just nice trades. And shorts. They can show up on any background. Okay. And they're just simple trades. Now, these trades should happen on the pivot bar. Alright, so the stop on these trades depends on how big your range is. If your range is a 50 range, then your stop should be like 55 ticks. Alright, let's double click on this. Your stop should be 55 ticks. It should be below the bar that got you into the trade. Alright, or above the bar that got you into the trade. It's as simple as that. And if you have a 50 range bar, you should be looking for probably 100 ticks. Alright, and this is on the ES. So a 50 range bar on the ES, like this morning, we had a trigger right here at 55.41, and it ran all the way up here to 55.71. 30 points on the ES. 30 points on the ES with one contract. Now you stop on that. If you're trading the regular contract, the regular ES, of course your stop is going to be a big stop. But you made, you had a 50 stop is what, divided by 4. That's, what, a 15-point stop, something like that. It's less than 15, it's like 13-point stop for a 30-tick gain. and it did it again right here. Same thing again, right? So you stop on this. If you got here 40, let's say 59, let's just say 60 is where you entered, and your stop has to be below here, below 47. So 14-point stop, and 60 up to 88, a 28-point gain. This is what the sniper looks like, the conservative sniper. Okay, the thing should trigger on the pivot bar when it triggers. Now the reason it's in beta, well, the reason it's in beta is mostly because I haven't triggered the alerts. I haven't created the alerts for it yet, so I'm not. It doesn't trigger an alert when it happens, and it doesn't trigger an alert before it happens. So I'm still trying to figure out how I'm going to give you an alert before it happens. But but I can definitely trigger an alert when it does happen. And it's not like the other ones. You see, when it triggers, it usually pulls back a little bit, almost every time. So when it triggers, you have time to put the trade on. You know, almost every time it pulls back some after it triggers. So, you know, you can use it that way if you want to. And this is on a 50 range bar for the ES. Now, let's put on a 50 range bar for the YM. This is where I took that trade earlier that I showed you. I think I took it off the YM50. I might take it off the YM20 range, but either way. It was right in here, somewhere in here is where I took it. It might not have been on the 50 then. It might have been on the 50. But either way, you can see how well it works, right? And this is the conservative one. Okay, this is the conservative one. Now, once I turn on the aggressive one, the conservative one usually triggers before the aggressive one, alright? But in here you see 1, 2, 3, 4 trades in this screen right here. If I slide it all the way over here, you still just see 4 trades in the screen. When I turn the aggressive one on, I bet we see 15, maybe 20 trades on the screen. Longs and shorts. And this is using the 50 range on the YM. So if you go down to a smaller time frame, you know, obviously you go down to a smaller time frame, you're going to get a lot more trades. It's going to do a lot of math to figure this out right now. But once it's done, okay, there's not that many more trades here on the smaller time frame for the YM. But let's go back to the 50. And I'm going to shut that off. And get ready. This is going to take a while for it to figure out too. But I'll put the aggressive one on. There it is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Look at that, 15. And out of those 15, we had... This one stopped out. This one didn't really go anywhere. 3 out of the 15 would have been stop outs. That's the aggressive sniper. And this is on a 50 range bar, so there's some time in between all these bars. You know, this was at 12:07. Now this was 11:01. 11:01, and this one here was at 13:45, and this was at 14:01, and this was at 14:11. So there's some time in between these trades. And again, these are 50 range bars. So, you know, when you take a 50 range trade, you're expecting at least 50 ticks out of it. Every one of these trades. If you just did a 1 for 1. But almost every one goes much further. Right? Your stop, again, is going to be below the bar that got you into the trade. They're not going to happen on the pivot bars. They're usually going to be the bar after the pivot bar. 1 or 2 bars after the pivot bar. But it's the bar that got you into the trade is where your stop's going to be. Below the bar that got you into the trade. Okay? And these are jumping in with a little bit more of the momentum. After it's already started. They're jumping in with a little bit more of the momentum. And, I mean, I wasn't cherry picking this. You can do this anywhere. At any time. You can go and look at this anywhere at any time. And if you want to look at it on the ES, we can look at it on the ES. And Mark, I'll show you the SPY in just a minute. Here's the ES. Now again, this is on a 50 range. But it's the same stuff. Over and over and over and over and over and over and over again. We just had a nice long trade here on a 50 range. Now if you drop it down to a 7 range, you're going to see the same thing again. When it finishes the calculations, it's the same thing again and again and again. Now, is that not worth $25 a week? Okay, changing to the QQQ. Okay, let's go to the QQQ. Now the QQQ cannot do on a 7 range. Alright, the QQQ you're probably going to do $470. You probably want to do that on a 100 range. Now with the QQQ, 100 range means each bar is $1. Right, each bar is $1. That's what that means. Okay, so I mean you could do it even on a bigger one. If you're trading, like Mark, when you're trading ETFs, are you trading them? Yes. Okay. Yeah. The question was, will all this be included in the first 3 days of the trial offering? Yes. If you sign up for the trial right now, I'll add the beta version to it. Usually when you sign up for the trial, you're just gonna get the TV trades. But I'll do the TV trades and the TV trades beta. All right, I'll do them both for you. And anybody who's in here who's already subscribed, if you don't have the beta version, send me an email at support@targetviewtrades.com. Just say snipe and give me your TradingView login ID. Your TradingView login ID is right up here for me. You might have like your initials up here or something like that, but give me your TradingView login ID. Okay. Right. But this is what it looks like on the QQQ, and this is on 100 range. But if you want to do something bigger, this is not meant. This is called the snipe is actually a range sniper. Okay, range. These are made for range bars. They're not made yet. They're not made yet for like minute bars and stuff like that. I mean, they work, but they don't work as well because well, first you don't get as many, and they don't work as well because, well, I guess you do right here. This is what, a 5 minute? Yeah, I guess. Because there are certain things that look for the up close and down close that you only get with a range bar. The bars closing at the top or closing at the bottom. There's things like that. And you can see it still works well. It still gives you good indications. But I'm going to make it better before I release it for that sort of thing. Okay, I'll make it better for you guys. But this is like the QQQ. So if you do the QQQ, you could do it on the 250 range, and that's gonna, with that, Mark, you would probably get in one day, and you would get in one day, and maybe hold it for a day or two. If you get like a short one, let's go to where we are right now. Like the last QQQ was a short back here yesterday. It said the short back here at 462, and it ran down to here to 454. And so if you're holding options, if you bought some puts right there, they're gonna have some value right there. Now it hasn't given a long yet for today. I had this gap right here. This morning I had a gap up this morning on the QQQ, and it's odd that it hasn't given that much movement based on the FOMC stuff that happened. But that's how I would use it. Can you move auto stop using an ATM strategy? Yeah, you can if you want to. Like let's say you get in here. Let's say you're using a 50 range, not on a QQQ, but say you're using a 50 range. Well, you were talking about the ES. So let's go to the ES first. Okay, we'll go to the ES first. And on the ES, we won't use a 50 range. Let's use one of the things that I would normally use, like a 15 range on the ES. That's a good number. The reason it's a good number is because it's one less than 16. 16 is a multiple of 4. So if I were trading this on the ES on a 16 range, my stop, well, your stop is only going to have to be a little bit below the bar that got you into the trade. But you can put your stop on, and then as price moves up, 8 ticks, you move your stop to break even. And then as price continues moving up, you can have it ratchet up after that to keep trailing your stop up after that. Like right here, just give a long trade right here. Now this is a good example. 65.75 was a long trade, a long opportunity right there, and so far it's run up to 69.25. Now I think I have all my times open here. I could put that on. And today's my last day at 19 contracts. My plan to move to 24 contracts to move to 20 contracts over 24 months. I'm at 19 contracts right now. It's the 19th month of my plan. But that was a perfect trade right there. If you had a 16 range right there. And I didn't go cherry picking this. I just flipped it to a 16 range because that's the number that I would use if I were doing it that way. Again, if you haven't signed up for the free trial, you really should go here to the home page and sign up for the free trial. It's only $25 a week after the 3-day trial. Alright. You can sign up for the monthly. I would recommend signing up for the monthly, really. It's cheaper than the weekly, but it's up to you. Whatever you want to do. It is now 3:51. I have 9 minutes left. 9 minutes left. I want to make sure I answer everybody's questions. So the last question I got was from Abaid. You say, can I move an auto stop order using ATM strategy? Of course you can. Where did you say you traded? Okay. Who did you say was your broker? Casey, you said yours was AMP. But you see right here, I don't know that it's going to give a long trade. You know, it just switched into the red background. Now that is not necessarily indicative of anything when you're using the bias. So Mark, what you were doing before about shutting off the back color, if you wanted to do that with the sniper, you can do that, right? Because it's not as significant. You can even shut off the bar colors if you want to, because it's not as significant, right? But with everything else, the bar color is significant, and the background is significant. But for the sniper stuff, you don't need those. Okay, the other stuff, the colors and the bar colors and the background colors, they all play into getting the alerts appropriately at the right time, and they let you know, give you a visual cue as far as the audio or email or text or whatever kind of cue you want. It gives you a visual cue in addition to that. That's what these colors are for. Okay. So, Abaid, who did you say was your broker? You didn't say who your broker was. So right here we're selling off right here, and it's not giving a short trade yet. Right? It's probably gonna have to go down and then pull back and then go down again before you actually get the short trade. But we'll see if it does give us one. Now, if we go to a smaller time frame, this is what I do in the morning. This is what I use in the morning. This is 7 range, and when it calculates all this, there it is. So in the 7 range, we would have had a short right there a minute ago. Along back here that didn't go anywhere, along here that didn't go anywhere, along here that would have been good, along here good, along here good, along there that didn't go, short there didn't go. This is a bug right here that I gotta fix. It had an up close with a down arrow. That should never happen. Did it again right there. That should never happen. Just so you know, if you get a down arrow with an up close, and it worked out in that case, it didn't work out in that case. That shouldn't happen. Okay, that's why it's a beta version. You're not going to get a black arrow. If I put the conservative one on, you might have a trade right here, right now. If I put the conservative one on there, just that. Hang on, it missed that last bar didn't paint. There it is. Okay, so it gave you that one, and you gave a little bit in profit. Now the way that I do it with a 7-tick range, see, this is the conservative one that happened before the black one. The way that I do it with a 7-tick range is I bump my stop to break even after 4 ticks in profit. Okay. I don't know about that one. I know I've had lots of people use Top Step and lots of people use Apex, but I don't know about that other one that you just mentioned. But this is great for that kind of thing. You know, for those of you guys that are using the prop firms, this kind of trading is good because I don't know what their rules are exactly. I never used one, but I don't know what their rules are exactly. But I know you can set this up so that if you go to the larger time frame, you know, your risk, the risk rules that they have about running risk, it's different. Do I use any other filter for the trades? No. The question, do I put anything else on the chart? No. Alright, everything that you need is built in. Now you can adjust the things that are built in if you want. Alright, like the bias level, I said the bias level is always set. It's always turned on for the snipe. Alright, so you can change that. If I change this, then you're going to have more trades. If I make this like a 55, you're probably going to get more trades in here. Yeah, so you got more trades in there because it reduced the amount of trades because it's only going to give you short trades below the 55 and it's going to give you long trades above the 55. That's a simple moving average. I think I put that in there, right? Yeah. it's only going to give you short trades below it, it's only going to give you long trades above it. Alright, so that's the one thing that you can use, but I didn't want you to have anything visual as far as that's concerned. Alright, it's still going to give you concrete decisions, long and short concrete decisions based upon the rules for the trades. So you see the arrow, you take the trade. Alright, there's no second guessing it. You see the arrow, you take the trade. You accept the risk before you do it. If the time frame is too big for you to accept the risk that you're going to put on because the bar size, go to a different time frame. Or, like I said at the beginning, go to micros. You can trade a couple of micros, cut the risk in half, and use the same signals. If you find that there are better signals on another time frame, a larger time frame, then go to the larger time frame and go to micros. Cut your risk and have the same signals. When you go to a larger time frame, the targets are going to be a lot bigger. Alright, like all that stuff that I was just showing you on these 50 ranges, I would be having much bigger than 50 range targets on that. I would be locking in profit as it goes, but I'd have a much bigger than 50 range target. Every one of these that went 20 ticks, I'd be locking in 20 ticks. 15 anyway. Alright. But other than that, Paul, do I put any other things on the chart? No. The whole idea behind this is that you don't have other things. I mean, 90% of the people that lose money trading, it's because they have indecision. They can't make up their mind. They need something to tell them this is where you trade. This is where you should put your profit. This is where you should put your stop. All that kind of thing. All right. If you put stuff on here, like let's say you start putting on. If you go up here and we'll just take some random thing out of here. We'll put on just a random. That's a MACD, but let's not do anything at the bottom. Let's just go right with price. We'll put on exponential moving average in EMA. So now I get this EMA on here. And right here, you might say, well, that's too far away from the EMA. I don't want to take that trade. Or this one right here, that's too close to the EMA. I don't want to take that trade. This one right here, the EMA, that's good. It's a close down below. I do want to take that one. Or this one right here, well, the EMA is down below the last EMA, so I don't want to take that one. The dip down below is lower than that one right there, so I don't want to take that trade. And people make all these decisions at the last minute, and they are seldom correct. All right. M or W. I think that broke up a little bit. What do you mean by M-O-W, M-O-R-W? What do you mean by that, Paul? Right. So you don't need to have an EMA on there. I'll make sure I answer your question, but I'm not exactly sure what that means because it looks like it's broken up. M space O space R space W. I'll show you what it looks like to me because I don't know what the question actually is. Here. This is what it looks like to me. M space O space R space W. Okay, oh, you put it in. The second arrow from the right, price forms a W. Oh, okay, you're talking about price formats. Alright. Like price patterns, like head and shoulders or inverted head and shoulders and things like that, right? That's what you mean. Okay, that's what you mean. Do I take that into account? No. No. In a single answer, no. Everything is technical based upon price action, alright? That stuff is, those are the patterns that you see when the price action plays out. I mean, you can look at this right here and you can say, okay, well, this is a head, this is a shoulder, this is a shoulder, this is the neckline. If it goes down below here, we should have, that it should go down from here. You can look at that and say that, and that's great. You have that information, that's good. You can store that away. You can look at that if you want to. And if it does, that's great. And if it does, you get some indication to short it all the way down to here. You got to go with the indication here. It doesn't look at the patterns like that. It looks at the price patterns and what's happening right now with the price patterns and what's happening. The reason I use range bars is because every bar is forced to close at the top or the bottom. So the patterns have to have price action. You have to have price action to get to the next bar. That's why I can create things that is so much more accurate with range bars. Okay, so I don't look at that stuff as part of the trade setup. I look at it as something that might be interesting to stay in a trade or to manage a trade. Okay, that can be used for trade management. Again, the question now is, does it take volume into consideration? The question is, does it take volume into consideration? Well, volume is taken into consideration in so much as you have to have volume to have price movement. If you have a lot of volume, you can have a lot of price movement. If you have a lot of price movement, you can have a lot of bars. If you have a lot of bars, you can have a lot of price action. So yes, it does, but not directly. Okay, not directly. If this chart could help me to take the trade, before or at the beginning of a price trend. Okay, when you're talking about the before or at the beginning of the price trend, that's these things. Turn these guys on, the ones that I showed you in the beginning. All right, they happen nearer to the beginning of the trend. All right, those happen nearer to the beginning of the trend. They're not right at the beginning, but they're close to the beginning of the trend. Okay, so you can turn those on, and you can turn the other ones on if you want to. You can turn them on so that you're only trading in one direction. Just have the longs on, and then when you turn on the snipe, you have to turn on the aggressive snipe. If you're feeding off this blue one right here, you can only take long trades after that. Alright, if you have this and you don't get any more long trades, then you're not taking any. But if you have this one over here, you just go with the long trades after that. Right, because you know that it's trying to go long. So just go with the long trades after that. Right, and if you want to turn on just the shorts, you can do that too. You can have it just show the shorts. And after the red ones, you're only taking short trades after the red ones. So you wouldn't take these long trades, you'd only be looking for short trades after the red ones. Right, like after this red one, you take that short trade. After this red one, you take that short trade. And that one, and that one, and that one, and that one. Okay, after this red one, you take that short trade, that short trade, that short trade. Okay, is that helpful? Are the videos available for the purchase? There's videos on the website. Yeah, you can go check out the website. Go here to the homepage, the website. Everything that's here on the website is here on the website. And this video right here, I'm recording this, and this will be on the website in a half an hour. Okay, it's going to be under here on the TV Trades web recordings on the website. I'll have this video on there for you guys to watch. Okay, it'll be right here. It'll say, this was last week's. And so it'll say something like that. It'll be above this. It'll say what I did today. Okay. Alright guys, it's 4:03. It is time for me to wrap it up. Did I answer everybody's questions to your satisfaction? Everybody? Again, if you haven't, John, I just saw a question from you down there. What the heck? I didn't see your question. My recordings, yes. Yes, I am recording this. Okay, so I just answered that question too. Alright. Casey, I'm going all the way back to the beginning. Casey's, Mark, maybe we'll start trading futures. There's, the liquidity is, I mean, the leverage is a lot better in futures, Mark, but there's a lot of things that you don't get in futures. I mean, if you're normally an ETF trader, then you can use this stuff to trade ETFs just as you would anything else. Right? You could put this on the ES, you could put the ES on a huge time frame, like a 250, and trade the SPY based on what you get off of that 250 range on the ES. You know, you could easily do that. Like back here on the 5th of June, it gave a long trade, and you could have bought ETF calls right there, and that would have worked out great. Over here, if you bought puts, well, it wouldn't have worked out so well, but you know pretty much right away that it's not working out, you know, because the risk is at the bottom of the bar, so you know right away if it's not working out. Okay, you got 2 buy signals in a row without an intervening sell, is that right? Yeah, that can definitely happen. You can have 2 in a row without a sell. That just happened in what I showed you a minute ago with the red arrows on the shorts a minute ago. There were 2 red shorts without any buys in between. It has to go to blue first. You have to have a blue background, but you don't necessarily, because remember what I was saying about the price action patterns that have to happen to get the blue and the red arrows. The bar before, for the red arrow, the bar before has to be a down close. Okay, and for a blue arrow, the bar before has to be an up close. And so sometimes when you have a color change, you don't get the arrow. Okay, and I only wrote that in because I determined over time that the majority of the trades that did not have that sequence didn't work out as well as I wanted them to. Okay. Alright, so here's the 50 range ES, here's the 7 range ES, here's the 15 range ES. This is one we were looking at a few minutes ago, wasn't it? 15 range, something like that. I don't know. Anyway, guys, I'm going to wrap it up. If anybody comes up with any more questions, you can email them to support@targetviewtrades.com. Support@targetviewtrades.com. Go to the website. There's a lot of stuff here on the website. But if you have any questions, email them to support@targetviewtrades.com. I'll get back to you as soon as I can. If you have not taken the trial, go here to the website. Just right here, take the trial. All right, there's another one down here at the bottom, same thing. I used to have another section in here that covered crypto, but then I found out I can't show crypto on my website because Facebook doesn't like it. So I had to take that off. But anyway, you can do this stuff with anything. You know, I didn't really show you doing it with stocks, but you can do it with stocks too. You can do it with crypto. You can do it with stocks. You can do it with futures, forex, whatever you want to trade. You can do it. All right, I'm going to wrap it up. Thank you all for coming today. And this video, again, will be available here at targetviewtrades.com. It'll be under TV Trades web recordings right there. Okay, guys? Thanks for coming. We'll see you soon. Talk to you soon. Hopefully. Wait, there's one question. Oh, okay, you just said thanks. All right. All good. Thank you, everybody, for coming. I'm going to stop the recording in just a minute. I want to stop it on a chart. I'm going to stop it on a 50 range chart. There it is. Sweet. Every one of those trades worked out. All right. That's it, guys. We'll see you.